Welcome to Quarterly Taxes for Therapists 101. I'm Michael from Herd. In this 5-minute video, we're going to cover what self-employed therapists need to know about quarterly taxes so you can stay on top of your tax payments and avoid IRS penalties. Let's get into it. First, who has to pay quarterly taxes? Quarterly taxes can feel confusing and overwhelming, especially if this is your first year in private practice. The good news is the guideline from the IRS here is actually pretty straightforward. If you expect to owe $1,000 or more in annual taxes, then you're required to make estimated payments quarterly. So how do you know if you're going to owe $1,000 or more in annual taxes? First, you need to estimate your gross income or total income for your private practice for the year. Then you're going to estimate your business expenses for the year. You'll take your gross income minus your expenses to calculate your estimated net income or business profit for the year. That's the number that you pay taxes on. A 30% tax rate, if you expect to earn around $3,500 or more in profit for the year, then you likely need to make estimated payments. So if this is your first year in private practice, you have a bunch of expenses, you're not making profit yet, you likely don't need to make estimated payments. But if you expect to earn $3,500 or more in profit, then you'll likely need to start making estimated payments quarterly. Why do we have to make estimated tax payments quarterly? Can't we just wait until we file at the end of the year? If you've ever had a W-2 job, you know that your employer withheld taxes from your paycheck. That's federal income tax, state income tax, if you have state income tax where you live, and things like Social Security, Medicare get taken out as well. Your employer filed payroll reports quarterly to the IRS. When you're self-employed, none of that happens. So the IRS still wants that money from you as a taxpayer during the year instead of waiting until the end of the year. When are estimated tax payments due? The first estimated tax payment is due by April 15th. The thing to know here is that April 15th is also tax day. So your tax return and any outstanding tax liability from the previous tax year is also due on April 15th at the same time. So if you don't make estimated payments throughout the year and you pay everything all at once, you likely won't be able to also make your Q1 payment for the current tax year. So it is helpful to make these payments quarterly to stay on top of it. So when you get to filing your tax return, you don't have a big surprise tax bill. So your first estimated tax payment is due by April 15th. The second estimated tax payment is due by June 15th. The third estimated tax payment is due by September 15th. And finally, the fourth estimated tax payment is due by January 15th. One way to think about this is 4 checkpoints during the year. And so by April 15th, you should have paid at least 25% or 1/4 of your estimated tax liability for the year. By June 15th, you should have paid 50%. By September 15th, you should have paid 75%. And by January 15th, you should have paid 100%. How much should you pay in quarterly taxes? There's 2 ways to meet what's called safe harbor to avoid underpayment penalties from the IRS. The first is to pay at least 100% of your previous tax year's liability. If you're a high earner, which is defined as $150,000 or more in annual income, you have to pay in 110%. This is a good option if you were in private practice last year and you expect to have a similar year this year in terms of the amount of taxes owed. So as long as you're paying 100% of your previous tax year's liability, you'll meet safe harbor and you won't owe an underpayment penalty when you file. If you weren't in private practice last year, you want to look at your current tax year's estimated tax liability. And as long as you're making estimated payments that equal at least 90% of your current tax year liability, then you'll avoid underpayment penalties by meeting safe harbor. How do you pay quarterly taxes? This part's actually pretty straightforward. You're able to make estimated payments directly to the IRS online through IRS Direct Pay. You also can mail in a check. What happens if you don't pay quarterly taxes? If you owe $1,000 or more in taxes, you'll likely be charged an underpayment penalty when you file. And so if you wait until the end of the year, you'll likely have to pay an underpayment penalty, which can be avoided by meeting safe harbor with estimated tax payments during the year. If you have questions about quarterly taxes, drop them in the comments. Be sure to like and subscribe for more.